Is the economy on the brink of a crash? Discover how top analysts like Danielle DiMartino Booth explain the current financial turmoil.
That's right. We have Danielle, Steve Hanke, and other experts diving into the biggest threats to your investments today.
We've condensed their hours of insights into just a few minutes, saving you precious time while keeping you informed.
So stick around. First, Danielle DiMartino Booth will unveil critical insights on inflation and its impact on consumers.
And don't miss what Steve Hanke has to say about the stock market's troubling trajectory. It's essential for your investment strategy.
Remember, this information is for educational purposes. Always do your own research.
Today, we'll explore the economic analysis provided by Danielle DiMartino Booth during her recent discussion on Bloomberg Radio.
Booth highlights critical factors influencing inflation and the economic strategies needed to combat these trends.
Danielle DiMartino Booth articulates that inflation continues to be a significant challenge confronting the U.S. economy.
She emphasizes that the decisions made by the Federal Reserve profoundly influence these economic conditions. Booth emphasizes that rising consumer prices are significantly affecting household budgets.
How long can families cope with these increasing costs is a serious concern.
Danielle discusses the influence of the labor market on economic recovery.
A robust employment environment is essential for sustained economic growth.
Booth notes that the Federal Reserve's interest rate changes aim to manage inflation.
However, there are growing concerns about the Fed's credibility.
Danielle predicts that ongoing inflation pressures may persist if current policies remain unchanged.
She warns that without effective strategies, economic stagnation could pose serious recovery challenges.
Danielle DiMartino Booth concludes that monitoring inflation trends is vital for effective financial planning.
She stresses the importance of proactive adaptations in economic policies to ensure financial stability.
Today, we're diving into insights from housing market specialists regarding the current housing landscape.
They'll discuss how upcoming developments may reshape the market for both buyers and sellers.
Experts analyze the impact of rising interest rates on affordability.
They note that an increasing housing inventory signals potential market slowdowns. As interest rates rise, we observe a significant drop in mortgage applications.
Many potential buyers report increased financial strain due to higher borrowing costs.
Specialists point out that a rise in inventory indicates demand may be cooling.
This situation could prompt necessary price adjustments to encourage sales.
The discussion touches on how the government may proactively respond to these recession signs.
Speculation about potential policy adjustments that could influence the market is present.
What are the projections for home prices over the next few months?
Analysts foresee a correction in home prices due to rising inventory.
In conclusion, potential buyers should remain vigilant about market trends.
Opportunities may arise as prices decrease.
Today, we're delving into the complexities of market dynamics with insights from John Miller.
John emphasizes the impact of volatility on investor behavior and market strategies.
John Miller provides an analysis of how support levels are being affected.
This shift suggests that investors may need to adapt their strategies.
John points out that as volatility rises, investors often become more cautious.
This cautiousness may prompt quick liquidation of positions to minimize losses. John's analysis reveals a decrease in market momentum across key indicators.
The emergence of bearish trends suggests potential downturns ahead. What does John predict for the market in the short term?
John envisions ongoing volatility as market support levels are tested and potential corrections loom.
In closing, John advises investors to closely monitor support levels.
He also recommends considering asset allocation adjustments to manage risks in this volatile landscape.
Today, we're unpacking recent market trends analyzed by Dr. Emily Brown in a discussion hosted by David Lin.
Dr. Brown warns that current market conditions reflect significant volatility impacting investor strategies.
Dr. Brown highlights that the unpredictability of the current market is shaking investor confidence.
She points to rising interest rates as a significant contributor to this volatility, urging investors to stay vigilant. Dr. Brown explains that as interest rates rise, equity markets will face increased pressure, leading to potential corrections.
This translates to higher borrowing costs that can hinder consumer spending and overall economic growth. What does Dr. Brown say about current investor sentiment?
Dr. Brown observes that investors are becoming more cautious given the heightened market fluctuations. According to Dr. Brown, significant market corrections are on the horizon, which investors should be prepared for.
This echoes the need for strategic adjustments in investment portfolios. What predictions does Dr. Brown offer for near-future market trends?
Dr. Brown suggests a best-case scenario where the market gradually recovers, while a worst-case scenario could see significant downturns impacting major indices.
In conclusion, Dr. Brown underscores the importance of monitoring interest rate changes as a critical factor affecting the market.
She also advises that investors should prepare for substantial volatility and consider diversifying their portfolios to mitigate risks.
Today, we're examining the financial landscape after reaching the $100,000 threshold with insights from Graham Stephan.
Graham emphasizes that crossing this milestone alters not just one's financial situation, but also their perspective on wealth creation.
Graham Stephan asserts that reaching the $100,000 mark significantly shifts one's financial mindset.
He points out that many individuals start viewing money more as an investment tool than merely an income source.
How do investment strategies change after hitting $100,000?
Graham indicates that people begin to diversify their portfolios and invest in stocks, bonds, and real estate. Graham notes that there is often a tendency to enhance one's lifestyle at this income level.
This may translate into more travel or investing in experiences rather than merely luxury goods.
What does Graham foresee regarding wealth management after reaching this financial milestone?
He warns that while growth is achievable, the true challenge lies in maintaining and effectively managing that wealth.
Graham concludes that individuals should remain proactive in their financial education as their income rises.
He underscores the necessity of seeking professional advice to navigate new financial terrains.
Overall, reaching the $100,000 milestone is just the beginning. Managing it well will determine future success. Today, we're examining the stock market's troubling trajectory, as explained by economist Steve Hanke.
Steve highlights how inflation and increasing interest rates are central to the equity market's current challenges.
Steve Hanke warns that investors should be cautious as the stock market shows signs of continued decline.
He stresses that rising inflation is significantly eroding consumer purchasing power, ultimately affecting overall market confidence.
Steve Hanke explains that high inflation directly diminishes consumers' purchasing power.
As spending declines, corporations inevitably see reduced profits, which can exacerbate market drops. Steve highlights that rising interest rates create a challenging environment for equity markets.
Higher borrowing costs discourage business expansion, resulting in lower future earnings predictions. What does Steve Hanke predict for the stock market moving forward?
Steve predicts that without fundamental changes to economic policies, stocks could continue to decline significantly. Steve advises investors to remain vigilant and consider risk management strategies during this period of uncertainty.
He suggests that diversification might help mitigate losses in a volatile market. In conclusion, Steve Hanke emphasizes the importance of closely monitoring inflation and interest rate changes.
He also advises considering the impact of economic policies on market performance when making investment decisions.
What a wealth of insights we've gleaned today from our financial experts.
Absolutely. Each guest, from Steve Hanke to Graham Stephan, provided unique perspectives that really opened up the discussion.
It's quite striking how everyone agrees on the importance of rising inflation and interest rates in our current economy.
And yet they diverged significantly on their views. For instance, Hanke warns about rising stock market challenges, while the housing specialists focus on a potential drop in home prices due to increasing inventory.
That's right, and I found Graham Stephan's insights on income milestones particularly fascinating, such a crucial aspect of financial growth.
Exactly. The balance of personal finance with market dynamics is vital, as seen in Danielle DiMartino Booth's analysis on the Federal Reserve's policies.
If you enjoyed this conversation as much as I did, be sure to hit that like button and subscribe.
Your support means we can keep bringing you these valuable insights directly from top experts.
Join us in our next video, where we'll explore the implications of global trade on local economies. You won't want to miss it.